how the Fed might or might not move at its July meeting and thereafter. Joining me now to discuss is PIMCO's Rich Clarida. He is a former Fed Vice Chairman, of course. Rich, it's great to have you today. Since we last heard from the Fed in a formal collective way at the June meeting, probably got some friendlier inflation numbers. It seems like the market grew more comfortable with the idea that perhaps things were developing according to the Fed's hopes and expectations. Where do you think that leaves the Fed with regard to how it sets the stage for any move it might make this year?
Thank you. Yes, we did get some good news, really confirming what we saw in the CPI report. We got some good news on the PCE index, which is the Fed's preferred index. And importantly, the 3-month average on that is now down below 3. It had gotten up north of 4 a couple months ago, and it's now annualized at running at about 2.7. So that's good news. I don't think the Fed will have enough new information to do anything at the July meeting at the end of the month. And the other thing to keep in mind about the inflation outlook is that when you look at the year-over-year comparison, which is what the Fed looks at in terms of policy, those comps start to get more difficult in the fall. So our view remains that the Powell Fed does appear to want to get one cut in this year, but most likely if we got that, it would be late in the year, say at the December meeting. It could get interesting if we continue to get better than expected inflation data. It could make September a live meeting, but right now we're sticking to our view that there'll be one cut later this year.
So at this point, yeah, you would think that perhaps the market's getting a little bit too aggressive in terms of pricing a likelihood of a cut in September?
Well, right now, there's not a 100% chance of that. It has moved up, and that makes sense. And certainly, we'll get reports at the end of July, at the end of August, and we'll get a CPI in September. So there's a scenario where you get enough good inflation data, in particular, if the economic data continue to move in the direction of a slowdown, that it could make September a live meeting. But right now, I think the pricing is broadly fair.
Just looking at the Fed's stated framework, obviously, as you know, in terms of where Fed funds rate is relative to PCE inflation, they believe that means policy is pretty restrictive right now. They've always said they were going to be likely starting to ease before the actual inflation target was met. The current run rate year over year of PCE is kind of where they thought it might be at year end. So a lot of that stuff builds toward at least the room for a cut. Now, this other line has become a little more commonly repeated, I think, which is, Powell wanting to make sure that when they do ease for the first time, it could potentially be the beginning of multiple cuts. In other words, they don't want to just sneak one in. Is that relevant?
Well, I think it is relevant, yes. I mean, certainly both through the communication and history of the Fed, we tend to get rate cutting cycles. Although sometimes, for example, in the 90s, there were only really several cuts, and so that's certainly feasible. But both the SEP projections, which we now have, the dots, which we didn't have 25 years ago, and their comments indicate that from their point of view, if they're going to be cutting, they want to be cutting in expectation that inflation's down to 2%. And certainly if they were concerned that wasn't the case, it would make them hesitant, I think, to even get that one cut in. I agree with you.